Well, good morning, New York, good afternoon, London, and good evening, Tokyo and Sydney. I hope you can all hear me, and I'm going to put the chart slot on right now. Please just type up if you can hear me, and let's get the screen up, if this works. Okay, here we go. So what I'm going to do, if you could just type up in the chat, yeah, you can hear me. Thank you, Gary. Appreciate that. I can't see the chat while I'm presenting this, so I'm going to go through like 20 minutes of what I would like to show you, what I think is going on, and then I'm going to allow 40 minutes for questions, and I'll try and answer them. And a bit of a creaky desk here. So let's go into the charts. I'm going to speak for 20 minutes. I'm not going to read your questions. You won't hear anything from me in response to your questions, but I'll try and tell you what I think is going on. And then we'll go into questions. So let's go across from the Forex majors, and we'll go from the euro. Let me just close that. We'll talk about the euro and the pound, etc., dollar yen against the majors, and then we're going to some of the stocks and stock indices, some of the names that I'm looking at. We'll look at some of the metals. We'll look at, of course, at commodities, other commodities like natural gas and cocoa and oil and perhaps wheat and something like that. And we'll have a look at Bitcoin, the US 10-year, VIX. We've been trading all of these, not the 10-year, but we've been trading VIX and Bitcoin, and then Rumble. And then I've got a couple of other stragglers on here, the dollar South African rand and the pound South African rand. So let's start with the Forex majors. And you can see the sort of positions I've got in here. Well, one of them at least, the Swiss yen. You can see I've got a curved red line on here, but we'll get back to the two yen pairs. Before I talk about the Forex the two big majors, the European currencies, the euro and the pound, let's have a look at the dollar index. And I'll tell you what I think is going on here. And the answer is I'm not 100% sure just yet. This black line is the 100-period moving average. We're above it. We've reached the 61.8% Fibonacci. That's this blue line. So we've come down. We've retraced. Overall, I think that the dollar is going to be ranged this year. I think we're going to be ranged between somewhere probably below 100 and somewhere above 100. And that's about the best I can say. But what we do have is various bits and pieces in here. We've got a big megaphone pattern going on the dollar index, or an expanding, broadening pattern, which means that we may get to the top of this broadening pattern or the bottom of this broadening pattern and trade within an expanding range. Right now, we're stuck in the middle. We couldn't be any more in the middle of the range than we are at the moment. Right there in that blue block, literally halfway from the top to the bottom, we're at it right now. So if you want to see what it's like to be diddling in the middle of a range, you can see it right here in the dollar index. Now, we've had this move up. You can see we've been stepping up. We've got to move up, sideways, move up, sideways, move up. and sideways. But this is the first time we haven't held on that move up. On all of these other occasions, we moved up and moved sideways, moved up, moved sideways, didn't move down very much. And on this occasion, we immediately, when we got to that level, got rejected, moved down again. So, but we are above all the moving averages. There's the 50, 220, and the 100. So from that perspective, it's bullish. But from this bigger range perspective, we're slap bang in the middle, as I said, and there's no real reason to be expecting this to go either up or down. And it's all dependent, as much of the market is, all the other things that we trade, the other commodities, instruments, indices, whatever, are all dependent on what the Fed's going to do in this year. And it's an election year, and we've had an incredible rally on the Magnificent Seven, on the NASDAQ. S&P's done pretty well as well, just coming off a bit. We'll talk about those in detail shortly. But basically, we'll have to see how the Fed reacts to things like inflation, which is now ticking up, consumer sentiment, which is now ticking up, which is not good for inflation. We've seen industrial numbers coming down dramatically, and that's affecting natural gas, of course. The biggest influence on natural gas is a contentious subject, is not actually the weather. That may affect the top movements of the range of natural gas, but really what we're talking about is industrial production, electricity generation, and whether there's enough demand for natural gas, including heating and cooling demand. Of course, that does play a role, and I'm not to deny that, but that's going to affect the dollar, the Fed, etc. Industrial production, that's what I was talking about just now, is going to affect gas. But so it's all sort of combined in amongst this sort of, is there an economic downturn? Is industrial production really collapsing? Are retail sales and jobs as buoyant as the numbers seem to suggest they are? And what's the Fed going to do in an election year when there's all sorts of things riding on the outcome of this election in many people's minds, whether it's true or not, in terms of the future of the world and civilization in the US? And it's a very, very, very hotly contested, perhaps with a clear winner, depending on your perspective, election. So what is the Fed going to do? Are they going to cut rates early, as they thought they might, by March or so? Or are we going to see a delay, as we are now seeing creeping into the narrative? Are we going to see rate cuts later on in May, perhaps in June? I don't know when the next one after that is, and maybe July, August. Is it going to be pushed out? Are we going to see a rate hike? Is inflation going to tick up, as we've seen it start already? Or is that just a sort of a counter trend rally in the downward trend of inflation? All of these questions will affect the dollar index and interest rates, and actually things like energy, natural gas included. So having said all that, given that we're right in the middle, given that we're in a tumultuous period of the market, and that this market could go either way, really, the dollar particularly. So I don't know. But what I do think, though, when it comes to currencies, is that there are still opportunities to sell the yen pairs. In other words, buy the yen against the other currencies, including the dollar and the Swiss. Those are the two that we're in. We're short on both of those. And there are a number of reasons for that. And I don't think we've got an awful lot of time to discuss that here in this forum. But suffice to say, we've got incredibly overbought charts. We've got problems in Japan caused by currency exchange rates. We've got all sorts of deflation and inflation both at the same time, worries in Japan. The Bank of Japan has said that they may start to look at increasing rates in March. That might be pushed out further. I don't know. A lot depends as well on how inflation affects the rest of the world, how that trickles into Japan. But I do think that if we're going to be trading currencies, the best bet at the moment is to be shorting the yen pairs. History may prove me completely wrong, but shorting the yen pairs, and the two that I've chosen are the dollar yen and the Swiss yen. Now, quickly, let's look at these very, very briefly. There's the resistance level, the order block level, supply zone, if you will, on the dollar yen. We haven't quite reached there yet. I'm allowing for it. We've gone past the 78.6% Fibonacci. We've gone past a few other resistance levels, and we're stuck with this one at the top. I'm not sure if we're going to get there. This is quite a clear classic reversal sort of pattern on the daily chart. I don't know if you recognize it or know it, but you get this sharp candle up and then the beginning of this sort of waterfall movement down. We've seen it many times before, like that, for example. There's an almost exact replica of what we're seeing right now, except we did have that little bounce yesterday, or not yesterday, Friday. But something similar to that. You see a big spike up, beginning of the waterfall, bit stuttering. We've seen a big spike up, the beginning of the waterfall, bit stuttering, bit of a bounce like that. And on this occasion, it took about another week before we started to move down. So we're kind of at a similar sort of pattern, but lower at the moment. So we're short on that one, and we're short on the Swiss yen. This one's, you know, at all-time highs, really, or not, maybe not all-time, but decades and decades, but forming the surrounding top. And we don't need to go down very far before we get into profit on this. We're, I think, long from around about 169.50 thereabouts, short rather, not long. And so if we can just drop down a bit, we can get some good profit on this. And there's an awfully long way to drop. This is a day chart, looks like a 5-minute chart. Those are our support levels, the key ones all the way down here. There's a bit of minor support in the low 160s, but it's only when we get into the 140s where we see the real volume, the real action, and the real support levels, order blocks, and demand zones and that sort of thing beginning to appear in this region. So there could be a long way down, and that looks like an awful way down, long way down, but it's not in terms of percentage. I'll show you quickly on this roughly. Let's just draw that down. If we got all the way down here, all this way down, from 170 to 140, that's only about an 18% drop. If we got down to 147, that's a 14% drop. If we got down to 150, 152, it's about a 10% drop. So yeah, it's big in terms of currencies. It's 1,000 pips in, if you think about it in terms of the euro and the pound, in terms of what you traditionally think of in terms of pip value, but it's you know, it's only 15% on, it's 15% on the Swiss yen, which is only about 10%. That sort of move, 1,000 pips on the other currencies, actually about 9, maybe even 7%. So it's not as massive as it looks. All right. So those are our two positions on currencies, and I don't have anything to add to that at this point. And we'll look at the euro and the pound. Let's see where this dollar index goes and whether we can get dollar index, you know, rushing up into some stronger resistance levels, or perhaps pulling back down into some supports. And we'll have a look at that in the private trading group as we go along. But I'm not going to trade the majors. We'll stick with the yen pairs. One, the dollar yen, the major, and then the yen cross against the Swiss franc. Right, now going to currencies, not currencies, stocks. You can see my positions on stocks here. Short on NASDAQ from near the top, short on Nvidia from near the top, and long on Tesla from near the bottom. As I said in my last video, people have often asked me, why would you short Nvidia and buy Tesla at the same time? They're both big players. They're both Magnificent Seven, both on the NASDAQ, both tech type stocks, although Tesla's, it's debated all the time whether it's a car stock or an IT type stock, tech stock. It's probably both. So, but basically, I think that, and again, I don't really want to go into long discussions there. I think basically Tesla was oversold. We bounced off support. Let's start with the NASDAQ, and we'll talk about the individual names. So NASDAQ, I'm not even going to talk about the S&P because it's very, very similar. We've got this big channel up. We've got two channels actually on NASDAQ. We've got the steep channel, the black lines with the yellow fill that we're in at the moment, trying the bottom of it. And we've got this very large, longer term channel. And the bottom of that channel coincides with the 200 period moving average. All right, bottom of that channel is just below 16,000. The bottom of this big channel where we are right now at the moment is about 17.5, 17.7, the price is at the moment. We've had 5 touches on this channel. 5 touches is enough. Normally a trend line will break after 5 touches, sometimes after 4, we've got to 5. It might take 6, it might take 7, but the longer we get along this trend line, remember, it's a steep short-term trend line. It's going to break sooner rather than later, and probably this week, I would imagine. We're short from the top. We've come down hard on that trend line. We didn't bounce on Friday. We haven't bounced today, and the stock market's closed today. So by the time we get to tomorrow, if this moves down a wee bit from here, closes beneath this trend line in what's now aftermarket trading because it's not officially open, we will gap down and open below that short-term trend line. Our next targets are these horizontal lines below us at 16.8. And we've got various moving averages, 50, 100, 200. You saw where the 200 is at the bottom of this green channel. That's my target there at around about 15,800. Call it 16,000. Actually, call it 16,200 because I like 8s and 2s, and we made 16,000. So 16.2 is that first, well, second touch, but first revisit of this trend line. Or that's actually what formed this trend line, and that's right there. So let's go with that for a start, and maybe we can get to 15.8. We might even get down to the 200 period moving average right down here somewhere. I don't know, but that's a good start. 16.2, then about 16, 15.8, somewhere around there, maybe lower. I don't know at this point. Let's see how momentum goes or doesn't go. But for now, we're still short. It looks good. I'm happy with it. And like I said, if we do move down today and open tomorrow below the trend line, that will be a gap through the trend line and down, and quite often gaps that straddle trend lines or horizontal lines or moving averages or any area of supply and demand, support and resistance. Often those gaps will remain in place for some time and not be revisited immediately. So we could get some, in other words, some more powerful momentum moving downwards. Same thing on the S&P. I'm not going to go into this because it's pretty much identical, really. Except we've only got 4 touches on the S&P. So there's one, you could call that one a touch, I suppose. Let's count that one in. It's the same then. So there's 1, 2, 3, 4, 5. We're on the 5th touch. Not quite as aggressively down as the NASDAQ. I expect the NASDAQ would move down faster because of the Magnificent Seven unwinding potentially some positions. We've seen some unwinding by people like Jeff Bezos and others right at these highs. And so this one hasn't unwound as fast as the NASDAQ, but there's the 200, there's the 20 period moving average, 50. 50 is right at that green support, 100's right at that red support, and the 200 down here. We've got to get through that trend line, and then we've got to get down into some of these support levels before I'll consider buying. My overall direction, bear this in mind, keep it very clearly in your minds, because I'm not bearish on these stock markets. I'm actually bullish. I'm waiting for corrections to buy into, but in the meantime, I'm happy to sell at these extended, very high levels and nibble around at these tops, waiting for the pullback to exit those shorts and then rebuy. So that's the overall idea on stocks. So one of these will go work out properly, Nvidia or NAT or Tesla or both of them. Sometimes stocks do go in opposite directions, and Nvidia we're in, and I don't like the look of this chart on Nvidia. Let's have a wee look at it. So we've got this support level here. This is, if you remember, if you were trading it back in May last year, I was, and I got caught short on this actually, when we gapped up from at earnings, after earnings, as a result of earnings, from 307 up to 380, massive move up, and we haven't come back to that yet. That's my overall target for Nvidia. One day, I think we'll get back down into that gap down there. If we do break the support now at this point here, the top of the gap, I think we're going to get right to the bottom of the gap, because that support is now a flat top break. If we break below it and close below it, we should reach the bottom of the gap. That green line, incidentally, was the previous all-time high before this gap up on earnings. Can you believe that? And that wasn't long ago. Let's see how far back that was. Excuse me. So that was in November 2021. We're in 2024 now. So it came all the way back down from 330 to 100. We dropped about 66% on Nvidia. So don't tell me we can't do the same again, because we've done it in the midst of a bull market. Fair enough. The AI hype started around about here near the bottom. And also we had the COVID pullback on all stocks. But it does happen, and it has happened, a 66% pullback. All I'm asking for is a move from 700 to at least around about 400. So that's about a 40% pullback. So there we go. What I'm going to do on this one, you can see I've got this channel drawn in there, which is now sort of no longer valid. I'm going to pull this channel down here quickly to the bottom of this range now and do it like that. Actually going to, yeah, something like that. So now we've got this broader channel. We're at the channel mid-center line. I'd like to see us get to the bottom of the channel, or this green line here. We've got earnings tomorrow on Nvidia. I have the idea, and I could be completely wrong, that earnings, even if they're pretty damn good, are going to disappoint, and we'll see a pullback in Nvidia. And I don't know if that's true or not. It doesn't really matter. If it does pull back, that'd be great. We'll be in some profit on that. If it doesn't, I think I'm pretty well hedged with this long Tesla trade, which is already quite a long way in profit. Let's have a look at that. And I'm running out of time. I don't want this to extend too long. So excuse me, this is very informal. I've got some Coke here, and it's President's Day, so things are a little slow. So the reason I bought Tesla, pretty obvious from this chart, bottom of the channel. Pretty oversold at that point when we got down there. We moved from 263 to 178. It's a long way down, and we bought at the bottom there. So I have a long Tesla position. However, I think this might be the way we go on Tesla. I don't know at this point. That's why I'm not going to make any predictions. I try never to make predictions, actually. So I try to react to what the market's doing and the levels that we reach on the charts. So Tesla we're pretty much at the top of this red line already. We've already reached sort of my target on Tesla, but I don't know what's going to happen here at this juncture, at the mid-center line of this channel, which is at about now currently, if we moved up to it, about 210 to 214. If we get up there, I don't know what's going to happen next, quite honestly. But I've got a long position on here. I've got a short position on Nvidia. I'm wondering if they'll continue to move in opposite directions, as they have somewhat done, although Nvidia hasn't really moved down much. I don't like this pattern on Nvidia for the bullish side. We've got all of this stuff happening. If you remember a few days ago, I said this spike high here is pretty important. Will that mark a top on Tesla? And so far it has. So we made this wick high, spike high, came down, moved back up again, sharp bounce, tried to get back up there again, didn't even reach that high, let alone pierce it. And then 2 bearish days, opening up, gapping up basically, and moving down. So we're getting 2 days in a row of gap up, move down, gap up, collapse, gap up, collapse, twice in a row, and below this spike high. We've also got divergence on the stochastic. We've got divergence on the RSI. It's incredibly overbought, of course. I mean, you just have to look at this chart. It's kind of ridiculous. It's a bit of a boom, a bit of a bubble, I suppose. And perhaps we can get back down to the bottom of this channel. Now, that level there, that previous high is at about 500. It's a big round number, so I like that. We're at 726 now. So that would be a 20% pullback to this line. Now, what I'm going to do actually is duplicate this quickly and put that line right on the 500 mark there. And let's make that a big red line so that it's clear. So that level there is my target for Nvidia. Not only is it the channel bottom, by the time we get there, the channel bottom will be above the red line, but these moving averages are moving up. So we've got the 20-period moving average, is the first thing we've got to break. Then we've got the 50, then the 100, then the 200, and then the big earnings gap below us. So let's see if we can get down to, first of all, 600, and let's say 600, that line there. And then this flat top breakout level. We've broken out. We have not looked back. Most of the time when you get breakouts, markets will retrace to the scene of the crime. You've heard that from other YouTubers. Not my favorite thing to say. Many of you will have heard it, though. There's some YouTubers that a lot of you follow, and I agree with him. The price will at some point probably retrace to the scene of the crime. That's this breakout at 500. Okay, that's all I'm going to say on stocks. You can ask me questions if you've got further ones. Gold, I've got nothing to add on gold. It's moving sideways. There's our arrow for longs. We're right at the same level. Well, when was that? That was the 3rd of January. First trade of the year, actually, on gold, long. We're now halfway through February, and we're still at the same price. So until this either moves up or down, I don't know, but we're long. I don't really know which way this is going to go. I'm long on URA too, and that's not going to trade today, nor is UEC, but we're long on that from about the current price. This is uranium. Remember all the uranium hype over the last couple of months, and all it did was fizzled out and fell back into the channel. Of course, that was going to do that. When we broke out through this top here, if you remember this, there was enormous hype we had this gap up through this was the resistance level, this green line, massive gap up, huge hype. Everyone said uranium's going to the moon. We actually started selling right at the top here. We sold again there. We bought at the bottom. We bought again now. I think URA could get through the top. I think overall, longer term, and it's not going to be overnight. It's not going to be to the moon tomorrow, like everyone thinks. This is a gradual process like anything. There'll be periods of grand exuberance and excitement, and then this pullback, which stops out everyone who got FOMO and loaded the boat and all that sort of thing. It's got to happen. Happens in every market, every time. And that's what happened here. Massive FOMO, load the boats, all got involved. Lots of gaps around this area, gapping all over the show, up, down, everywhere. And we're back where we were at the sensible level to buy inside the channel, near the channel bottom, 100-period moving average, and the 50 just above us, or yeah, just above us. So that's metals. So gold, we have a long position. Silver, I'm not interested in at the moment. We do get an industrial slowdown. It looks like, by the way, industrial numbers last week were absolutely appalling, and it's not surprising that natural gas has taken a fall off to the lowest level since COVID. And those of us or people involved in industry or trading industrial stocks, the Dow, etc., or investing in industrial sorts of companies, should pay attention to the fact that natural gas has dropped so low, and there's a reason for it. It's not because the weather's too warm only, it's partially because of that. But the main reason is because I think we're in serious trouble when it comes to industry. No one's using gas. Industrial numbers were terrible, absolutely appalling last week. So it goes, it works. It kind of makes sense. All right, so having said all that, let's go through some of these commodities. Soya. Well, we have a long position on soya. Lots of people are asking me. I'm sure we'll come back to this because people are asking about it in my private group. There we are, soya below the channel line, but there is a shortage in the crop part of this equation. Apparently, I haven't done my research on this again today, but I will be doing that tonight, probably looking at the soya futures and the markets, the growing regions, what's going on with weather and crops and so on. But it does appear that there is some support from the supply side. In other words, crops are a little, there's going to be a shortage of some sort, I think. But I never trust those reports fully anyway, because the same thing happened with cocoa. There was going to be this massive shortage. The market got cornered, and there was a whole hoo-ha about that recently. If you've been trading cocoa, you'll have a bit of insight into how that goes. So soya, I don't know. Is there a shortage? Is this price going to pick up? Is it going to go the same way as wheat, when wheat should have apparently picked up and it didn't? And everyone was buying wheat. I was actually saying this is probably going to go lower. If you're trading wheat, let me just remind you, this is my picture. I've had this on here for months now, this line, this gray line. Let me see if I can get in there with that. Is the sort of idea I have on wheat, which means we could get down below 500 on wheat. Or we might bounce here. I don't know. So we've got a green supply block here. Excuse me, that's my phone. Siri. Go away, Siri. All right. Siri listens to certain words very intensely, and then if you just say it by mistake, Siri's there. So we might find support here. I don't know. I haven't really done a lot of work on this, but I do know that I wouldn't be buying this at this point. And people were going long here. Again, this breakout through this MSB line here. Everyone was going long, and there was the Ukraine situation going on and getting worse at certain points, and a perceived shortage of supply. Same thing happened with the oil, actually, with the Houthis shooting up the straits of, I can't remember the name, at the entrance to the Red Sea, and everyone said oil is going to the moon. Oil actually dropped. We were short. It was still short on oil. So there we go. That's wheat. Now let's get into the things that you're interested in mostly, and that's natural gas. So I'm going to spend the rest of the time on this, and then I'll go into some of the questions. What I need to do here is reset price scale. There we go. So that's soya. I will get back to some of these if you've got questions on them. Don't worry about that. Now, natural gas, let's have a look at this. I've done a video. I've done a video every day over the last number of days to keep you informed as to what I think. Doesn't really matter what I think. It's what you think that matters, I suppose. I think that this has got some support here. potentially. I think we could go lower. Let's go to the weekly chart, and I don't want to rehash what I've said in all the videos, but here's this weekly support level. And actually, no, I'm going to go to the other chart. This is my broker's chart. I'm going to go to the Henry Hub price chart, which is delayed by 15 minutes, but that's okay. And let's have a look at the weekly chart, and I'll just go through this very quickly with you. So we've got this downward sloping channel, these two green lines here on the weekly chart. We've touched this bottom 1, 2, 3, 4 times. This is the 4th touch of this downward sloping trend line, which connects these lows, the last one being the COVID low down here. This red line is a horizontal line touching the COVID low over there and touching previous lows. Now you can see previous lows have gone lower. In fact, lowest price recorded here was below $1. I think. Let's have a look. Is that below $1? Maybe it's not quite. Just above $1. $1.05. That's the lowest since 1991. $1.05. We're now at $1.55. So there's 50 cents below us that natural gas could theoretically still get to before finding the nearest support below where we are currently. There is one at 139, which is denoted by this green line. Let's zoom into that. So this green line, the COVID low, touching, sorry, let me just clarify. This green line is the bottom of a channel, which is drawn by connecting these previous lows, including the COVID low there. So it's a downward sloping channel. It's not horizontal like the red line is. Now let's go and have a look at where we are at the moment. That's where we are. And I'm just going to get rid of this for the moment. So we're at the red line. That's the support line. That's the horizontal support line. It's not the green support line, which is below us. If we drop down, this is the weekly chart. If we drop down to this green support line this week, in this candle, that takes us to 2.52. 2.52. That would take us to the line that connects the COVID low with the previous lows in this level, in this region, around the 150 level. It's a downward sloping line as opposed to this horizontal line touching the COVID low. I hope that's clear. That means we may find support exactly where we are right now. I've added on a little bit more to my position. So I have about 85% of my long size, of my position size I wanted long now. If we get down to 125 or 130, I might be hedged by then. I haven't decided. We'll talk about this in my private group, but I'll certainly be looking to buy at around 125. I may hedge here if we break and drop below there and exit those hedges and switch to long if we get there, or I might just hold everything, or I might actually exit some. I don't really know, but it's not a panicky situation. That's what I'm trying to say. I've got all sorts of options. I've got fairly 85% position on here. I can get down to 125, 126 and buy some more. I'm hoping that we bounce here. I'm happy with 85%, but there is a chance we could move lower. Now let's go into the zoom. Let's zoom in to where we are today. Let's go to the day chart, and there's our day chart today. As you all know, you'll have been watching this intently. We had 9 days down. Day number 10 was bullish, vaguely bullish, I suppose. It wasn't black. It was white. It wasn't red. It was green. We had 2 inverse hammer candles there. You can see it better on my broker's chart because this one's delayed, so it doesn't get that last 15 minutes, I don't think. And then today we've got this tiny little gap down, very, very tiny, minute gap actually, about I don't know how many cents that was. We closed at 160 and we opened at 153, so 7 cents and back up a little bit now. So let's have a look at actually what I'm going to do is go to my broker's chart now, because this one's not real time perfectly. Anyway, it's 15 minutes delayed. Back to my broker's chart. Let's have a look at the day chart on here. This is a live real-time price. This is the day chart. Look at yesterday, Friday and Thursday, 2 inverse hammer candle patterns. We're still hugging the center line of this channel. We haven't broken it. We're still also hugging the top line of the channel. We haven't broken out of that. There's the 20-day moving average. There's today's candle, the two hanging man candles, channel center line, and the channel bottom below us. I'm not going to worry about the channel bottom too much because we've got better defined lines by the horizontals and that sloping line which connects the COVID low, which I showed you on the weekly chart. Let's have a look at the 4-hour chart. All right, so there we go. I showed you this on Friday, and I said actually in my last video that we haven't yet broken down below there. Well, we have now. On that weekend gap, we broke down, not much, a little bit down there, and we're just holding above there now. Whether we're going to hold this or not, I don't know. I'm hoping we will. Not really for my sake. I wouldn't mind grabbing a little bit below us, but for the sake of those of you who are in pain and holding long positions right now, I really do hope that this actually moves up. There's the 20-period moving average and the channel top, tantalizingly close. Enticingly close, and I think it's so enticing that the market's going to give it a go. I think we might have to have a brief and quick and maybe fairly dramatic spike down first, but let's see. Maybe it is too tantalizing for the market just to squeeze up, push up through here, a bit of a short squeeze up into some of these moving averages. My initial target on all of these trades is $2. What I'm going to start doing as we start moving up, I'm going to keep my lower entries on. My last one was at the current price, and I'm going to start taking some of the higher up entries off to reduce risk and keep the lower entries on. And in other words, bring my average price, my dollar cost average price down as I take off the higher entry prices. So that's the way I'll approach this. But if we do carry on dropping before that happens, I'm willing to continue to look to buy natural gas. A lot of people are saying, well, will it drop to zero? It's never dropped to zero before. I don't see why it should drop to zero. I know oil dropped to zero during COVID because oil has to be put somewhere, and there was nowhere to put it all. So people were paying for it to be taken away. It's not the same with natural gas, as far as I know, and I'm no expert in natural gas drilling and production and transport. That's not my field of expertise. I come from a different industry. But I think that natural gas can be flared off. It doesn't need to be stored. It's not good for the environment, I'm sure, and not good for lots of things by flaring natural gas into the air with huge, massive flames. I've showed you pictures of the one down the road from us at Mossel Bay in South Africa, and it's flaring 24/7 because there's no one using that gas. So it can be flared. That means it it means producers don't need to pay people to take it away, basically, which means that the price, I think, and if you've got any comments, please let me know. If you're in the industry, I think it's quite easy to flare it. Not easy to turn it off, but you can just vaporize it into the air by burning it at the top of a long pipe, which comes out of the ground or out of the sea. So I don't think we're going to drop to zero, and I think we're going to have a very good try at holding at the current price. If not, we're going to see that spike down. I spoke about in videos last week, and on X, I put a tweet out on it. I even drew a picture saying that we could get that wick low, spike low, and then a move up at the bottom of this curve. It's a beautiful curve, by the way. And if you like chart patterns, you'll know what this looks like. It's a rush down. This is the NYMEX chart, the rush down, and then, the sort of waterfall, and then it's sort of an S shape starting at the top. I don't know if you can see it on the camera. So you get this sort of move up, this curve, this curling over at the top, collapse down, and then this curling over at the bottom as we start to try and form a bottom. And that's really what's happening here. And it's actually easier to see it on this chart. I've also got another natural gas chart, the Yoranda chart, which I don't have running here at the moment. Difficult to see. Yeah, so actually, if you get rid of today's candle, you can see it better. So that's why I'm thinking today's candle could be a spike down, a spike, and then back up. I think we might close at around 1.6 today. We know 1.6 is a key level. We talked about it last week. I think we could get a spike and a close above 1.6. That sort of thing, and then we'll see that pattern that I talked about, where you get the move down, bottoming. I've called it a nipple before, but it does look like a nipple. We've seen it. I've showed you actually twice now. So you get this curve down, and this curve back up again with a nipple at the bottom, and the nipple is that little spike low. Now today's candle is the ideal candidate for creating that nipple. It's right here. Let's see what happens. So that's my idea on natural gas. So we're long and looking for that to move up, but allowing for a spike down into, hopefully not, for those of you who will suffer pain from this, down into the 1.25, 29, 1.32, somewhere in there. It's not beyond the realms of possibility. Now, cocoa, I'm going to talk about oil. Cocoa, I had a big drama with my broker. It's all been resolved, I think. Tricky. This market was cornered. Of that, I have no doubt. There was a problem in this stuff's grown in one country primarily. That's Cote d'Ivoire, Ivory Coast, West Africa. There are several, 75% comes from there. Several other countries around there which also produce cocoa, but basically maybe 3 or 4 or 5 countries, maybe 6 in that region. And there was a concern, still is, about a 25% reduction in this last crop that's just come through now, which pushed the price of cocoa up. Not to this extent. This is ridiculous. There's the average 20-year price down there in those green blocks, about 2,500. We got to 6.5, 6.8, 5.8, somewhere around there. Actually, I think we touched 6,000 after hours on one broker. So ridiculous. And I think this market was cornered. It became very messy. Several brokers just stopped trading. I don't know the details of any of it, but I know what it looks like from the outside, and tricky to trade. We are short. We've got some positions, and I want to get out of that before anything else goes weird. So for now, but let's see how that goes. I think that's not trading today. And then Brent crude. Well, I'm short on WTI, not Brent crude. And I see, just looking at the news now, looks like a cargo ship was disabled in the Straits of whatever they're called. Let me just have a quick look. This is pretty important, I think. Just looking at, crew abandons ship. So, how much influence this has on oil, I don't know. But the news is crew abandons cargo ship after Houthi attack, and a US MQ-9 Reaper was downed by the rebels from Yemen, the Houthis. So as that occurred, our oil moved up a wee bit. So not a lot, but a bit. But we are short. You can see that the chart, I think. Let me just make sure everything's streaming properly. I hope this hasn't been. Yeah, so we are short. I think there's a big delay, actually. I'm allowing for a move up into this area here, 80 to 84. And failing that up into 88 to 92. So these two red regions. However, we are at resistance now. I do think that oil is going to move down. I think one of the main reasons for oil moving down is going to be economic downturn. And whether you like it or not, we've seen natural gas collapsing, and natural gas only gets to those levels when there's no demand from the economy, from industry, from electricity, etc. I think we're going to see a similar situation in WTI oil and Brent crude oil. I'll caveat that by saying there are problems in the Middle East that we're very well aware of, and there are problems in Russia and in Ukraine. But these have not so far affected the price of oil or natural gas. If anything, the prices move lower rather than higher. So I'm not too worried about all of that, and I think that'll be resolved. I have the idea that these two conflicts will be resolved before the middle of the year. I think it's just it's a projection, and I could be completely wrong, but I've got the idea that that's going to be the case. And I think we'll see a relief in energy prices as well, including oil. And I think that this economic downturn, which is almost certainly here because we've seen it in the industrial production numbers last week, terrible numbers, and we saw inflation ticking up. So all of these things are working together. I think we'll see oil coming down. But we're in a situation now where we're short oil, long natural gas. Interesting. And for those of you who observe these two pairs or these two instruments, commodities working together, you'll interestingly have noticed that often natural gas and WTI and Brent crude oil, let's see, natural gas and crude oil move quite frequently in different directions on the charts. All right, so that's it, folks. I think I I said 20 minutes, it was 40. Let's take 20 minutes of questions, and we need to be finished because I've got some other things I need to do. So I'm going to go back into the questions section and comments and try and read through these and get through as many as I can and answer them. So bear with me for 1 second. All right. So good morning. Thanks for being here, everyone. I really appreciate it. I'm not sure how many people are here. I'm not watching the screen, but I hope a few at least. And I really appreciate you being here. I don't expect you to be here. This is not, why should you be here? I appreciate it. I don't claim to be the world's best knower of natural gas or crude oil or dollar yen or gold or anything like that, but I'm trading off my charts. I'm trading off what amounts of fundamental information and various information I have at hand and that I purchase. So I'm just trying to share with you what I think, and what I think really is not important in the greater scheme of things. Just bear that in mind. I don't know everything, and I'm often wrong. So with that in mind, let's carry on. And also, if you're new here, please consider subscribing to the channel. You can also join. There's a join button underneath the video where it says update. I'm looking at my screen now. There's a button that says join. If you click there, you can join. There are 2 options, and you'll get access to members' videos, live streams. Some of them are just for members only, and early videos before I release them into the public, so things like natural gas. And also special videos and updates and articles that I pull out of various paid paywall channels, which I also put in there for members. So I try to support that as well as I can, given the amount of time I've got. But you certainly get a lot more stuff than you would do just by following on as a subscribed channel watcher. All right. So there's a button there. It says join. If you're not going to do that, that's fine. No problem at all. If you don't want to join, but give us a subscribe. I'd really appreciate that. I put quite a lot of effort, not all my effort, but quite a lot of effort into these. All right, so let's get to some of the questions. I'm going to try and. All right, Michael says, do you have a StockTwits group chat? No, I do not, Michael. I've never used StockTwits. Don't know anything about it. I've seen it. Actually, I think you may have pointed this out to me once last year, that you put some things up on StockTwits. Maybe I should go and have a look at it. I'm not sure how reputable it is either. Hello, Brian. Brian says, natural gas, the weather is very bearish, only opening 5% down. Oh, okay, that's a good point, Brian. Thank you very much. I appreciate that. Now, Brian, you can go and check out Brian at Energy Rogue. Brian, I'm going to put up your that's energyrogue.com, I think. So I'll put that up on there in the members chat. If you're interested in, we'll just go and check them out. A fantastic bunch of guys. Brian's a friend of mine, and all sorts of stuff on natural gas that is incredibly useful. So go and check out that site. But Brian's comment is natural gas forward weather was very bearish, but the price didn't move much on bearish weather. Perfect point. Thank you, Brian. So in other words, the price should have moved down a lot, but it didn't, which means it's bullish, potentially. All right. And Brian says crude oil is holding steady and it's bullish as well. So we're short on crude, long on natural gas. Let's hope we've got the direction right on at least one of them. But thanks for that, Brian. I do realize that it is slightly bullish at the moment. Hello, Tranquada. All right, cocoa is up in London. Positive news. Can you take that up? Okay, we talked about cocoa last. Yeah, so I think cocoa, to be quite honest, if I were you, I would stay out of cocoa for another complete week until next week. Let's see how things turn out in the wash. I think that there's a mid-season crop coming in. I don't know how that's going to look. They've been talking it down. In other words, talking the price up. Take that for what you want. Is this crop going to be miserable as well, like the main crop, or is it going to be sufficient to cover the shortfall? I don't know. I think it's worth waiting for another week at least on cocoa. So I don't know. All right, let's have a look. 1.835 for natural gas, Brian thinks. Well, that would be very good news. Is there a holiday in the USA for natural gas? Depends on your broker, Haresh. I don't know, but natural gas is open. Your broker may not be. Buy the trend, not the price. Okay, good advice. Key bearish fundamentals are lower demand due to warmer than normal winter and production hanging in. Okay, yeah, sure. We know that there's lower demand because of weather. We know there's also potentially lower demand because of industrial, a drop in industrial demand. So it's not all good news for natural gas for sure, but it wasn't good news for oil recently or for wheat. So quite often the contrarian view, not always, of course, but often the contrarian view can be true, can be correct as well. All right. Hi, hello, you. This too shall pass. Nice to see you here. Better late than never. So there you go. All right. Now let's have a look at this one. Brian says there are restrictions on flaring. There we go. Important feedback from someone in this industry from the US. Let's see what Brian says. There are restrictions on flaring. Depends on the state. There is a crackdown on flaring, which will force people to capture it. There are some spots in the US where the price at the wellhead, hang on, what does it say? Where the price, okay, I can't see the rest of that, Brian. Anyway, so flaring can be a problem. That's what you're saying. Sure. I said that earlier. The price of gold was about $200 in 92, so I think natural gas at $1.04 is a disaster. I don't think it's a disaster, Musa. Price is at the bottom of the range. The bottom of the range is 1.5. When we're between 1.5 and $2, natural gas is cheap. Between $2 and $2.50, it's pretty decent price. 250 to 350-ish is about where you'd expect it to be. Anything above that, let's say above $4, it's getting expensive. This is not abnormal. It's nothing unusual. I'm not an expert in natural gas, although people much more experienced than me in this field, actually on the ground, will know a lot more about it. In my opinion, we're at the bottom of the price range, and it's a ranged price between roughly $2, sometimes $1.50, very rarely, but sometimes, and $3, $4. That's the range. We're at the bottom of it. It's time to buy, in my opinion. Less than 10 cents. Okay, I don't know what that was about, Brian. Sorry. There are some spots in the US where the price at the wellhead is under 10 cents. Okay. Okay, so yeah. Negative at the wellhead. Well, that's interesting. Okay, today is in Canada is Family Day holiday, and the US have a holiday too. President's Day, stock markets closed. That's right, and we're all just having a bit of a rest and getting ready for tomorrow. And I think we're going to see some interesting moves. Gaps on the stock markets, potentially natural gas. Cocoa is going to be crazy. Gold, maybe we'll get a bit of a bid under at gold. We don't know. And then in terms of the dollar, I don't know either. So it's going to be an interesting day. But I think the interesting things are going to be things like gold, natural gas, Brent crude, Bitcoin, of course. We've spoken about Bitcoin already. Is that going to come back in and give us another chance to load up? And so it's going to be an interesting week. And it starts on Tuesday, not Monday. Today's Monday. It's a holiday, but we're just getting some early homework in here, I suppose. All right, Brian, thank you, Brian, again. I appreciate you being here, Brian. It's Hamas, is it? I can remember. I think it's Hamas has over 20% of the global supply in oil shipping. Yeah, and tankers, at least cargo ships, being disabled in that region. NatGas, please. I have a buying position at 2.04, 2.084, and I'm stuck. Okay. Yeah. So we've talked about natural gas. We're going to have to see how natural gas works out. Look, I understand that there's a terrible feeling amongst natural gas retail traders that the world has come to an end, that a lot of people have lost money, and it happens every time. and I do feel empathy and sympathy for those of you who are trading natural gas and have been buying at $2.50 and $2.70. I get emails every day, all day. 280, 3. I've got a question today. Will it get back to $4.20? How long have you been holding it from $4.20? Seriously. I don't mean to be rude, but if you're still holding from 420, that means you've been holding for like a year and a half or something. So, but I do understand that traders are getting shellacked by this price move. But you have to allow, with natural gas, it has massive moves. It's volatile. It's manipulated. It's subject not only to the largest supply and demand equations regarding basically industry and electricity for production and manufacturing, but it's also subject to big top level fluctuations in demand through heating and cooling for domestic and other heating and cooling needs. So, I get that. I lost my train of thought. How silly. So yes, these big fluctuations are caused because it's this volatile. It's an energy product. It's subject to geopolitical events and considerations, manipulation, corporations, various interests in government and outside government, a huge network of supply and production and transport and companies and governments and municipalities and states and regions all over the world buying it. It's a complicated, hot mess, really. And that's where retail traders like to leap in feet first and chuck all their money into it. And when you move by 10% in a day, you get wiped out. Natural gas moves by 5 or 10% frequently, and it's never going to be, or let me put it this way, natural gas moves 5 to 10% frequently, and it's not always going to be in your favor. In fact, if you're a retail trader, it's probably going to be in your favor less often than it is against you. And people get wiped out all the time. So I feel for you there, but you have to understand that there's a bottom rung to this trade that's at around about 1.5. There's a top rung to this trade. Apart from extraordinary circumstances, that's the caveat on both of these statements. There's a top rung around $3.50 to $4. It's a bottom rung around $1.50 to $2. And barring extraordinary circumstances, the price will often migrate towards those levels. And if you're not prepared for that and don't allow for that, you will get into trouble. You will get wiped out. You have to stop doing it. I don't know what else to say, really. All right. The new contracts, I don't know, Musa, I have no idea how your broker deals with it. You have to figure that out with your broker when they start rolling over, whether it's continuous, incrementals, all of a sudden, how they adjust your contract. Do they open yours and close it? Do they adjust what you've got? You have to figure that out with your broker. I don't know. Dinesh, I don't have time to do NKD. Well, in fact, I'm not even sure what you're referring to on NKD. Perhaps you can clarify. Thanks, Sibel. Appreciate you being here from Turkey. Fantastic. Thank you, Doruk. I appreciate that too very much. And Ruben just came across this polar vortex collapse event is now confirmed by the forecast for mid-February with stratospheric warming event expected to develop. Can we see a rapid breakdown? I don't know. Ruben, I have no idea. Never heard of that. I mean, I know what a polar vortex is, sort of. I didn't know there was a polar vortex or a stratospheric warming event approaching. No idea. Thanks to this too shall pass. I appreciate that. And that's Energy Rogue. For those of you who want to follow Brian and his crew over there, Energy Rogue, it's on the screen right now. Go and check it out. Fantastic. I think they have a special deal. Brian, you can let me know for ArcisFX subscribers. If you're a subscriber to this channel or to my private group, or you're a member of this YouTube channel, let Brian know, and I'm sure he'll give you a discount at Energy Rogue. I think he has a link set up for that already. So appreciate you being here, Brian. Thank you very much. A rapid breakdown of the polar cold wetter second half of February. Okay, I don't know, Ruben. Could be true, might not be true. I don't really watch the weather, so let's keep an eye on it. becoming like the British here. All we ever talk about is weather. It's like natural gas traders, and the Brits are the same in that way. Fed holiday off, had to tune in. Thank you, Gus. I appreciate you, mate. Really appreciate you visiting. In finance media, there are only a few that have such a high level of knowledge matched with an undetectably low level of arrogance. James is one of them. Well, thank you very much. I appreciate that. I have to say I am a little arrogant, though. I'm not short on self-confidence, but I do realize that I'm pretty fallible and weak and get things wrong quite a lot, and I'm not better than anyone else, and a lot of people are better than me. So as long as you keep those things in mind, most people will be fine in life. And don't be unkind. Be nice to people. Be friendly. Help people. Treat others as you would like to be treated yourself. If you do all of those things and don't be arrogant, you'll do pretty well in life, and people will enjoy being with you. So thank you very much. I appreciate that. I really do. Gary, a 4-hour candle with a super trend. Yeah. So Gary, I use 4-hour candles all the time. That's the smallest time frame that I go down to when looking at any chart, generally, apart from if I want to really zoom in on something to highlight a point or to point something out. But mostly it's 4-hour candles, day candles, and weekly candles. So, and that'll keep you out a lot of the chop, by the way. For those of you who are trading natural gas and you're new to it, or you're new to trading in general, you don't know whether you should be looking at 3-minute charts or 3-day charts. In my opinion, and I've been around for a long time, if you want to have a life and some sanity, it's a very good idea to trade 4-hour candles, because you literally only need to look at your chart every 4 hours. And that'll, not that you're going to stay away from your charts 4 hours at a time, I don't, but I only have to take action every 4 hours. I know that for a start. And if I don't want to look at my charts every 5 minutes and I want to stick to 4 hours, I can do. And you'll see the bigger trends, the bigger picture. You'll get less involved in the chop, in the mess, in the faffing about, in the whipsaws. You'll avoid much of that. And all you've got to do on natural gas, as a rule of thumb, if you really don't know where to start, look for reversal candles at the top or the bottom, 4-hour reversal candles, spike lows, spike highs, one up, one down, and engulfing candles, any engulfing candle, pull stop candles, and inverse hammers and hanging men, 2 of my favorite on natural gas. Check those out. If you don't know what they are, there's a website, or I think it's Investopedia. You can go and have a look at all those candle patterns. And also on my channel, I've got a candlestick video. Go and look down on my channel page. There's a video that says candlestick trading or something like that. It's quite a long video, and I go through all the patterns that I find interesting, and I rank them and rate them and tell you what I think are the best patterns and the safest and the most. I rank them in terms of risk and reliability and that sort of thing. So go and check that out. But that would be, yeah, 4-hour candles, great. Good stuff, Gary. Went long end of Friday, fantastic class. And we're coming to an end, everyone. I'm going to go through a few more questions. Pleasure on the cocoa, Lars. Stay out of it for a week or so, I reckon. CEOs are going to cut production. I don't think it's that easy, Boots, to cut production, I'm afraid. And Brian from Energy Rogue will tell you why. You can't just turn these things off. I don't know what NKD is, Dinesh. Forgive my ignorance, but I don't know what you're referring to there. Thank you very much, Nikos. I appreciate it. Yeah, and I don't want anyone to think I'm a natural gas guru, because I'm really not. I'm I trade all sorts of things, but I kind of got involved in natural gas. I mean, I've been trading natural gas for a long time, but it's not a focus of mine. I trade lots of things, and I'm not always right. And there are people that know. There's peanut barking in the background. There are people that know a lot more about it than I do. But I try to mix the chart patterns, common sense, which is often lacking, and also what's going on. Is there a demand from industry? Is the weather hot or cold? Are people bombing supply ships going through the Straits of Hamas? And I don't think it's Hamas. That's the name of the group in next to Israel. I'm getting a little tired now. What's that place next to Israel? Anyway, Gaza. It's the Straits of something. But yeah, so you got to just pay attention to the basics. Are ships being bombed? Is industrial reduction creating demand? Is the weather hot or cold? What are the charts saying? And apply some common sense. If we're down at 1.5, you probably want to be buying, not selling. And if we're at 3.5 or 4, probably want to be selling and not buying. That's simple common sense. And anyone can do it. I mean, it's not difficult. It's not rocket science. All right, and thanks, Pantino. Thanks, this too, Shoppass, my greatest fan. Thank you very much. Appreciate it. All right. Buying at 1.86 and 1.68. Okay, so you've got two positions. You're actually Sybil, I'm not sure how you pronounce that. You're roughly at more or less sort of my average pricing, I would imagine. I'm at around about 1.8 something, and that's fine. We're not far from that now. 1.56 at the moment. And if I can get a little bit more lower, I hope we don't go lower for everyone else's sakes, but if we can, I'd like to get a little bit more, and then I'll get my average price to about 1.6, and that would be perfect. But I think you're okay, as long as you're not oversized, as long as you can hold that for a little bit, as long as you're not trading Boyle and UNG and don't have to hold that for 3 months and get it eroded away very quickly. Oh, Nikkei. Oh, Nikkei. Okay. The Nikkei. Dinesh, I haven't been watching the Nikkei. No. Sorry. Silly me. Yes. I haven't been watching it. But I'm not sure if you're in my private trading group, but if you want me to, I can do an analysis on the Nikkei in there. Or if you perhaps remind me on Twitter, if you're on X, I can do something in there, whatever. But I can't do that now. I don't have time. Michael, I'm in South Africa, on the arse end of Africa. That's where I live. And the weather is 30 degrees or so today, but it is summer. It's midsummer. Yeah, more or less midsummer. The weather warning events Ruben is quoting will already be part of the Far East weather data and already influence the market price priced in. Thank you, Patino. So that weather we were talking about earlier, global warming and cooling and cyclonic, typhonic, polar vortexes and heat influence events are already priced in, apparently, perhaps. Yeah, there was Peanut, Brian. Peanut was barking. All right, Straits of Hormones. It's not actually hormones either. Yeah, okay. Hormuz, yes. Actually, I used to work pretty close to there in Egypt for many years. I know the Middle East quite well. Got some interesting stories. I was there when the planes hit the Twin Towers in the Middle. I was in the Middle East. Not to do with gas, to do with cotton. All right, and I think we're coming to an end. We're 3 minutes past the hour now, but we did have a 3-minute delay in starting. So let's go for another 3. Stefan, Boyle and UNG erode. Yes, it erodes because of, it's because of that, but it's a little bit more complicated, but it's basically because of those prices are affected by contango and backwardation and so on. But you can Google that, or if you're on X and you have an X membership, you can use Grok, my favorite new creature, toy. Grok's like ChatGPT and a bit funnier. There's a ludicrous mode as well on Grok. It's not called ludicrous, it's called humorous or something. I'll tell you what it's called. Anyway, if you can Google it or go to ChatGPT or something like that and just get a more succinct definition or explanation for why we get the degradation in price. A few years ago, oil traded negative for a short period. Yes, it did. Doesn't mean gas is going to. Gas has never traded negative on the futures, at least. Like Brian said, it is trading negative on the ground in some places, which is super interesting. Hello. Hi, Chad. Nice to see you, mate. From Oregon. Lovely place. And UNG, is there a better ticker in the US? Boots, I would suggest you just trade the futures, mate. There are various tickers around. I don't know what they all are. I don't use the well, ETFs, I suppose. Derivatives. I don't use any of those. I just trade the futures. And then price slippage and contract. Okay, I think we've got to the end of the questions, guys. I really appreciate being there. Please subscribe if you enjoyed it. Give it a thumbs up. If you've got any questions, you won't be able to ask me any more questions in here because it's finished. But you can leave comments in this chat. I'll try and read through them all in the comment section below. If you remember, if you join my channel, I will answer your questions personally and directly. That's another benefit I forgot to mention earlier. But more or less, I just want you to subscribe and give me a thumbs up. That's all. I appreciate you being here very, very, very much. Have a great day. I'll speak to you soon.